Well, hello everybody. It's September 13th. It's the weekly review where we take a look at what happened last week, what we think is going to happen the coming week, and generally just assess the situation and try to make sense of it all. If we think about the markets, what's been taking place, we've had a huge drop, right? I mean, it's a significant drop. 2132 lows made were 2132 to 1867. So, you got 250 points off the top. That's a pretty big move. That's not insignificant. It didn't stay there, of course. Came roaring right back, but now we're gyrating around inside that big bar. And what we've managed to do this week is set up a potential ABCD structure to the downside. Now that's the bad part, but that doesn't mean that we're actually going to go there immediately. We'll talk about that as we go along here. But if we look at what happened last week, we actually had that bounce that we thought probably would come. Takes the percentages down some in terms of losses, and sets us up for the Federal Reserve, which comes on Wednesday, Thursday this week, instead of Tuesday, Wednesday, which is normal. Which I think is going to set up a rather violent Friday potentially as a result of that, and we'll talk about that here in a second. So it was a good week if you were long. It's hard to be long when you're sitting in a position like we saw, where prices, they started the week down here. You really could go down and test the lows again. It would have been a great buy probably had it done that, but it didn't. And it bounced back up, tested these highs, failed, came back down, and so now you're kind of in limbo land, and we're going to probably stay in limbo land until the Federal Reserve does whatever the Federal Reserve is going to do. So let's move to what's happening, a quick review here. Blow that up a little bit more so you can see it more easily. This past week, there was a lot of rumors, especially late week, about more stimulus, more Federal Reserve talk, and that they're not going to raise rates. And that, I think, people pointed to as a reason why this market held up as well as it did at the end of the week. If you remember Wednesday, I was thinking it might be a potential buy on some sort of a retrace and then an attempt to break out. It actually got over the tops and failed, which made me want to pull out of those positions on Thursday, thinking that the market was going to sell off, but then it didn't. And then you started hearing all this stuff about the interest rates, that we're not going to see a rise, and that in fact is what was moving the markets. But if you look inside this thing, right, like at the IYR, the XLU, these stocks that have been sensitive to rate hikes and the fear of a rate hike, you can see they really didn't recover very much. And if I look at the XLU as a result of that also, same thing there, not much in the way of a recovery. And so when I look at something like that and I hear these stories of, well, that was what was happening, I'm not sure if I can really believe that. And if I glance over at the bond markets, for example, I don't see evidence of it there either. For example, if I look at the 20-year, that certainly didn't see rates rise significantly. If I look at even the short end of the curve, let me go to like 3 to 7 years, where you would expect to see it, I didn't see it there either. And so we're not seeing, evidence of this whole rate hike scenario that everybody was talking about. In fact, if you look at even at the dollar, you would think the dollar would get stronger if that were the case, and the dollar got weaker. So I don't know that really was what was happening. If that expectation isn't that it's the lower rates, then what was moving prices higher? And I think the more I thought about this myself and said, okay, what is it that's driving this week? It looks to me like it's just that we've come too far too fast. That violent move off the top was a big, fast, heavy depreciation of price in a very compressed period of time. That usually takes a while to bounce off, to work itself off and to bounce around. And that's kind of what's been happening, and I think that's really what we saw this week and nothing more. I was scratching my head at the end of the week trying to figure it out, and that's the only thing I can come up with. if we look around for what we really do know, we know that all the countries tied to commodities are a disaster. Whether I'm looking at the all ordinaries here on a weekly chart where they've broken down under the lows, so they're at yearly lows, whether I'm looking at Brazil, where it had been at the lows, got a little bit of a bounce, but it's hanging at the lows, or if I go up to Toronto, where our friends up north are at new lows as well. Disaster city in all commodities as they all continue to sell down. And that says that we're probably going to see continuation of commodity pricing pressures for some time to come still. The other thing that we're seeing is, other than Hong Kong, which is struggling, we're starting to see a bit of the bounce after another rather fast, heavy downside action. Here's Hong Kong, but if I look at, let's say, the Nikkei, for example, here you're actually getting some sort of a recovery. You get under, back over. Yeah, that one actually looks like it can bounce some more. Shanghai also, although I'm trying to put less weight on Shanghai. One that looked fairly clear was Taipei, even though we got a big, high volume low, got a big bounce up. And these are all going to come back, it looks like, and try to do retest, regenerates to the downside. So there's a little potential here to move up a little bit more in most of these markets. In some of them, they have a long way to go, but in general, they're moving up. And if I look at Europe, there the story's not quite the same in that Europe already had the bounce, looks like they're failing that bounce and wants to come back down. This is the DAX, and you also see it in the French CACs, where you go up, you test, fell over that high, right, the big bar's high, and you trade back down again. So it's a mixed world market. It's not that negative, it's not that positive. It just simply says we're bouncing around, and we're probably going to eventually test lower before it's over with. Does that mean we can't test higher? No, it doesn't. In fact, we can test higher, and we may test higher depending on what the Fed does. But in the meantime, until we get the next catalyst, it's just a bunch of bounce taking place in a bunch of countries all around the world. So despite the up week here, the U.S. markets really didn't reveal anything useful that I could see. As I said, I was scratching my head, especially Thursday, when I didn't get the follow through that I was expecting. But when I reflect on it over the weekend here and think about it, what appears to me is that these markets just had a compressed move and they're simply bouncing around. We're only, it's so easy to get wrapped up in the day to day. We're only 2 weeks into this move, the big move, 2 weeks digesting it now. It can take a good 6-7 weeks easily. We could be out in October before we really see a resolution of this. Now, the one thing I want to note here, and I have it in a later slide, is if you take this and you draw it up now, you actually have the potential for a B point. And if that B point is true and is down here somewhere, or even if it goes up higher, and I'll draw that one in as well, right? Both of them are going to test these October lows if in fact they play out. Of course, when you get a fairly small bounce, right, that just tells you the market's even weaker if it heads down again. The larger the bounce, then the stronger the market. And speaking of strong, right, strong really is in the NASDAQ and the NDX, and even there's the potential for the ABCD structure down to break those October lows. So let's not lose sight of the fact, that we're not out of the woods yet here. And a matter of fact, if this bounces a little bit higher and then we actually come down, test those October lows, I think it sets up the potential for the best buy of several years if it sets up that way. Okay, so if we turn our attention to the technical picture, last week got that bounce, kind of expected to bounce, but the thing that we got that I wasn't expecting is we got the test failures on Wednesday. And those test failures were across all markets, mostly the sectors and the indexes here in the U.S., but also in markets elsewhere around the world. And in particular, we're talking about this bar, right? So this bar tests into the swing point high, gets over that high, gets back underneath it, has less volume. It was also testing into these two breakdown bars on the way down. And if you looked at it on the weekly, that time frame, you also see the test failure occurring there on the weekly. So you push up, you have less volume, you come back down, right? That's a test failure. That tells you more than likely on the next bar you're going to get more downside. And we saw that across all of them, led me to believe that that is in fact what we were going to see happen, but it didn't. And it didn't neither on Thursday nor on Friday. And when the market doesn't do what you think it's going to do, right, then your thesis is probably wrong. And if it's wrong, then you need to reformulate that thesis and get back in sync with what the market's doing. I think that, I don't want to read too much into this, but I think that what's really going on, as I said earlier, is this is really just bouncing around as a result of the big push down, too fast, too furious on the way down, and you're simply getting a bounce back up off of that move. And so at this particular point in time, we have set ourselves up with a large range breakdown. That was about it was about 90 points off the top. That's kind of got two ranges underneath if we're looking at it on the daily. And so we're on the NASDAQ now. We're in this middle range, and we're trying to test back into this area to get back in a higher range. I suspect that's going to be a test failure when it occurs. It will be a full retest regen more than likely when that occurs. That's on the strongest of the indexes, and if we look over at the S&P 500, which is weaker, you can see that same sort of formulation up here with that range there, another one up underneath it, and then the one at the bottom. These aren't quite equidistant. That's about how they've laid out. This area here, of course, this top is the battleground, and that's between the bottom and the middle range. So if you get higher, if you get a push that takes you back into this middle range, right, then the odds of getting to the top of the range, right, so back up into this area, increase. So if you can get over this area here, more than likely you can get to there. That's the retest regenerate bearish. That's probably where this thing's going to find significant sellers if we're going to find them. And that would be the best case scenario on the way up, right? So a push up into this area. Worst case, and this is all based off of what the Fed does, worst case is that you don't get that push. And instead, you get the pull, right? And instead of being able to push up, you get the pull back down. And then, of course, this area down here becomes that. And as we've already said, if it happens soon, you actually have an ABCD structure, to take you much lower to the downside if that's the way it works out. So this week shapes up really all about the Federal Reserve, what they're going to do or what they're not going to do, and how that is going to influence prices. It looks to me like prices are going to hang until we get there. That we had the positive this week. Looks like it's probably tied just to the fact that we came down too far too fast, and with the Fed coming up, nobody wants to sell more. At the same time, nobody wants to buy more at higher prices, so we're just hanging there. NDX comparatively strong. That's as it was last week. The other thing it's still true is the probability of breaking down under those October lows, or not even the October, but the July lows, is still pretty small. If you get down there and you test them, it's probably going to hold. It's probably going to set up a good buy. So if we do get the push down off the Fed this week, that's probably where we need to look at the potential to do some buying. On the negative side, the weekly charts still exhibit that potential bearish ABCD structure I was already talking about. And those test failures on Wednesday, even though it held on Thursday and Friday, those were negative and still are negative in saying, hey, there are sellers at those levels. If we look at the fundamental picture, right, you've got the Federal Reserve, and that could be fundamental positive or negative. Federal Reserve next week, and the key thing about next week is typically the Federal Reserve does their thing on a Tuesday and Wednesday. They have the press conference, the announcement. This week it's on Wednesday, Thursday. Friday is usually a light day this time of the year. summer trading. So you're going to have the Federal Reserve come out with an important decision a day later than usual, giving it only 1 day for there to be the reaction. And why I say 1 day is, yeah, you do have a little time after Yellen gets through talking on Thursday, but really any large money transactions that are going to take place are going to take place the next day. The big players are not going to trade after the Reserve, Federal Reserve does whatever it's going to do. Their decision is going to be made that next morning. That's when they're going to make their trades, and that's all going to happen on Friday, which is going to force, if the move takes place, it's probably going to carry because you've only got that Friday day to trade it. The move's going to have, stops above, stops below. It's going to carry. And so the big move is probably going to happen on Friday. Maybe an escalation of volume on Friday, up or down. The upside takes us back to the bearish retest, regenerate. The downside takes us back to the lows. Either move probably carries towards those goals. Of course, after the Fed, if you look at the calendar, we're in the middle of September. That means that you've got earnings coming up in October. So we're only about 3 weeks away from that. So you'll get fallout from the Fed for another week. There's not a lot of data outside the Fed this following week, a little bit more the week after. But really, earnings are the next big catalyst. And if you think about the earnings, more than likely those earnings are not going to be as good as forecast. And the reason for that is you've still got dollar depreciation, or actually appreciation that's depreciating the gains that companies are making as a result of the dollar being stronger. I'm fairly sure that those dollar gains haven't been hedged away. It's certainly not fully by most companies. And as a result of that, that's going to continue to eat into their earnings and keep their earnings down. And you've also got, the financial engineering that has been going on hasn't been nearly as prominent the last 3 months as it has been over the last couple of years. That also is going to put a little bit of a dent, more than likely, into the earnings. So I think the comparisons are not going to be as good, and so I don't see the earnings being a big bump up. If anything, it's a slight negative. So last week we were watching two things. We were looking to see if the weakness persisted, and if it did, would we get a test of those lows? Well, not only did it not persist, we got the immediate bounce, right? And that was kind of the second scenario. And so we didn't even come close to testing the lows. Instead, we got the bounce. We went up to test that B point on that ABCD structure. And so if I pull up that chart, we were coming up here to test this B point on the ABCD structure. We did test it on some of the indexes and sectors. It failed. It failed there, and on some of them it failed on the bearish retest regens that were lower. That pushed us back down. That's what made me think on Thursday we'd probably sell back down, which we didn't. And so now we're kind of in that hang mode and probably going to stay there as a result. So that weakness didn't take place. The strength did develop, was sold, so that tells us sellers are up above. This week, what you'll be watching, well, is really the Fed rate decision, and it's really that announcement, as I was explaining, coming on a Thursday. We're probably going to see a larger move take place, and if there's a breakout to buy to the upside or downside, this will probably be the one. We haven't had that case now for about 3 weeks, but this one's going to set up that potential to actually do a fairly significant move, and we should be looking at that and trying to buy that breakout one way or the other when it comes. So economically, it's really the Fed meeting. There's some industrial production numbers, some CPI numbers. That was the same last week, and it's the same again this week. Thinking about it from a bottom line perspective, last week, as I said, I was expecting us to make some sort of a low, get a bounce. That's what we did. Then my mind changed, of course, on Wednesday when we got those failures. The market didn't behave the way it should. That's kind of put me in the back seat here saying, okay, I'm second guessing if we're going to go higher or lower. It's not clear. The market's not giving us a good signal right now, and if it's not, you don't have to try to force the signal. Let the time play in your favor. Let it tell you what it wants to do, and then use that knowledge, to make the next move that has a higher probability of success. So this coming week, the bottom line to me is that you've got the Fed, and the Fed's going to make its move probably forcefully on Friday. You'll get some clue of it on Thursday, but on Friday will be the move, and then we'll see which way it wants to break and then try to take advantage of it. Turning our attention to the portfolio, it's really fairly thin still, not much in it. The only thing that's moving really is Zeltique. Zeltique got a nice move up. Let's look at that chart. Now, we were fortunate enough to get it as it came back down on that second test. Now we up about 15% on it. There's really no volume escalation. What it's doing is it's coming back into this area up here, right, to try to test. I don't know if it's going to get there though, because if we look at it on the weekly time frame, you can see here that it's got this swing point high back here that it's tested before. It's going to test again. That's at 35.90. We traded up to about 41 today, and so we're just below that. I suspect that's going to be where it gets turned back this particular time, and so that's where we want to probably try to sell. There is going to be a push towards those highs again at some point. It just doesn't look like it's now. So, you know, given that we got a good entry in it, now we can think about taking some profits on some of that position on this nice move back up. Outside of that, really not much. I mean, Starbucks continues to look good. HEDJ still struggling. Everything else not doing much. You know, we're going to push back into positions here at some point, either short or long, probably on the Fed news this week. And, you know, I think that will be the next higher probability trade, and that's where we should look to try to do something. Strong sectors, weak sectors, pretty much the same as last week. Not much change there. So in a nutshell, you know, it's been a big moves, volatility up and down as a result of that compressed move to the downside. We were fortunate to position ourselves so that we did not get hurt by that move. Anyone that stayed long and strong, they're 15% down, you know, 10% down, depending on what they're in. You know, we actually went up on that move down. And so we're in a good position to take advantage of the next move. And what we want to do is continue to stay lightly invested until we get a good signal that it's time to get back in, and then pour our money back in, get about half of it in there. And then if we're right, you know, then we can scale some more in, or we can take some profits on the way up depending on how it trades. So let's be patient. Let's look at what happens. Let's let this market unfold, and then let's make our move as a result of that. Thanks for joining me. Have a great one. I'll see you next time.